Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. Well, it is the final day of the trading week and so far this week we are flat in the green on the Nifty 50 index. But yes, tariffs are out and yesterday market surprisingly took it quite well given that the Asian counterparts were slapped with heftier tariffs. But we'll watch out if our markets hold well in today's trading session too because the global handover is sharply negative. If you look at the GIFT Nifty trends, they indicated a gap down start for the markets. Pre-open rates are also indicating a lower start for our own markets. All major averages on the Wall Street closed sharply lower overnight. We saw US markets suffer the worst single-day drop in 5 years. And even the US futures was also in a slippery slope. S&P 500 index sunk about 5%. It erased about $5 trillion market value. On the other hand, if you see Dow Jones, that also slipped nearly 4% and Nasdaq logged the biggest decline in 5 years. On the other hand, if you look at the Asian markets, that also were in the back foot this morning. However, three main positives: US Treasury yields at the lowest level in 5 months, dollar index below that 102 levels, 101 it is where that is trading at this point of time, and oil prices also below that $70 per barrel. So we'll watch out if these three factors are enough to provide cushion for our own markets. We'll also touch upon what your trading strategy should be at this point of time now that the tariffs are out. We'll talk to market experts as usual. So don't forget to drop in your stock related queries and we'll take them up shortly. But moving on, let's quickly take a look at the top headlines this hour. US stocks record the worst day since 2020 after President Trump outlined new tariffs sparking recession fears. Stocks shed $3.1 trillion in market cap as the Dow nosedived more than 1,600 points. US Treasury yields also ended at their lowest level in more than 5 months. Another day of deep cuts across Asia as Trump's tariff order roiled the markets. Japan's Nikkei 225 falls over 2%. The GIFT Nifty is also indicating a weak start for our own markets. Oil prices fall over 6%, logging the steepest fall in 3 years as OPEC Plus unexpectedly speeds up oil output hikes post Trump's tariff. Gold prices trim losses as the wider market sell-off infects bullion traders. US President Donald Trump says the stock market plunge was expected and he termed the markets as a sick patient that needed to be operated on. Also said he is open to striking deals individually with countries. Indian startups need a reality check, says Commerce Minister Piyush Goyal. Says Indian startups are focused on food delivery and hyper-fast logistics that turn unemployed youth into cheap labor, while Chinese startups are involved in semiconductors and robotics, and adds that having just 1,000 startups in the deep tech sector is a disturbing situation. All right, we have two pretty interesting notes that is coming out on tariffs. First is on your Nomura, where Nomura is saying that the tariffs are bigger than they generally expected and they find this quite negative event for the Asian stocks. And while we're expecting that, tariff uncertainty is out, they believe that they do not see it as a market clearing event so far. And they expect the tariff repercussions to be felt quite on US, especially on their inflation and growth outlook. And they believe that the investors will scrutinize the US data to assess the economic health over the next few weeks too. Any softening of data can dial up concerns of recession fears, and they expect that the Asian manufacturers need to bear some cost despite what they believe is that they need to pass on the cost to the US consumers. They also believe that higher prices might lead to a slowdown in the US and the impact would be felt on the top line of Asian exporters. On the other hand, if you look at the Antiques report has said that there is limited direct implication for India because they believe that the products from India are quite low value added, which is exported to the US markets. And they also believe that the bilateral trade discussions with the US can be a positive. On the other hand, they believe sectors like IT services and staples could be a continue to drag on India. Now, since that tariffs tend to be inflationary in nature, it has increased the risk of recession in US. It is already up about 3% expected at present versus 20% in January. And given that US markets have a higher weightage in the global market, it can assure volatility for our own markets too. However, lower dollar index and oil prices, as I mentioned, could be a key positive for the Indian markets that we need to watch out for. Now, if you look at yesterday's trading session, Nifty slipped after announcement of tariffs, but the slip was lower than what we had expected. It slipped below that 23,300 levels in a range bound session. And broader markets also outperformed. So two main cues that will set the tone of the trade today. Option cues data, Nifty put call ratio has risen to about 1.1 levels, and fund flows, foreign investors continue to be net sellers. They've sold stocks which is about 2,800 crore rupees in the cash markets. Now just a couple of minutes, just a minute to go before we hit the open, but yes, the pre-open rates are pointing out to quite a negative start for the Indian markets. But since yesterday the fall was not quite significant, we will expect that the bulls could also rescue majority of the downsides, given that we had pharma index that actually outperformed in yesterday's trading session. So yes, less than 10 seconds to go, but we have technical expert with us, Raja Venkatraman, co-founder, Neo Trader, that will be joining us shortly from here on. But before that, we'll just take a quick check of the markets as it opens at this point of time. Well, Sensex is down about 158 points at this point of time. Nifty is also opened lower, below that 23,200 mark. We slipped below 23,300 levels yesterday, and today also we have slipped below that 23,200 mark. 0.2% cut that is coming in on the Nifty 50 front. Sensex also, extending that decline to about 200 points at this point of time. Sectorally, if you look at Nifty IT index, which was the worst sectoral performer yesterday, today also extending the loss with about 1.6% cut. Recessionary fears are across the markets, and risk-off sentiment is of course across the markets, and that is what Nifty IT is also taken up to the chin with about 1% cut at this point of time. Nifty Pharma index, if you look at, because yesterday that was one of the top sectoral performer. So let's take a look at how the Nifty Pharma index is performing at this point of time. 0.6% cut that is coming in for Nifty Pharma index. Some profit booking on the counter. Nifty Auto index with about 0.7% cut. Bank Nifty index, however, has opened higher with about 0.2% gains. So yes, one of the positive momentum coming in for the markets. Later, let's look at some of the other names. Nifty Metal Index yesterday also one of the top underperformers, and today also it has opened up with cuts of about 1%. If you look at the mid cap and small cap indices, the broader end of the markets, mid caps with about 0.4% cut, small caps also with about minor cuts of about 0.1%. So flat in the red at this point of time. Let's take a look at some of the top gainers on the Nifty 50. Well, Bajaj Finance were soaring in the trade with about 0.7% gains. Zomato, Dr. Reddy's Lab, Shriram Finance, all of them dominating the Nifty 50 gainers list at this point of time. On the other hand, if we look at the top losers on the Nifty 50, some of the names like Hindalco with about 2% cut. Auto names are also like Tata Motors. Yesterday we saw that the auto tariffs were also taken effect, 25% of auto tariffs, and of course given that Tata's JLR has quite a higher revenue exposure to the US markets, it has been taken a beating, and today we saw the CLSA's downgrade too. Tata Motors with about 1.7% cut. TCS with about 1.6% cut, and L&T with about 1.5% cut coming in from the top losers list. But let's quickly get on board with our technical expert of the show. Joining me is Raja Venkatraman, co-founder of New Trader. Raja, we have a negative start today also for the Indian markets because there is some recessionary fears which are back in the US. So what is the near-term outlook that we need to watch out for on the overall market perspective and of course on the Nifty levels?
Yeah, good morning, Lavisha. Thank you for inviting me to the show. So, when you take a look at what's happening, it's primarily a reaction to the global cues. And when you consider the overall news flows that are going to emerge on the domestic front, I would say that this reaction would settle down in the next few hours, because what the entire world is perceiving is that there is a slow but steady decoupling of the US environment. And now, with the countries also gearing up and they are able to form new alliances, the kind of tariff which has been imposed on the world across it's going to have a lesser and lesser impact. That's what the world is perceiving now. This scenario should also be considered as an opportunity for each of the particular country to take a stance and make some changes. So it's going to be an interesting phase for our markets. We are also going to understand how to react and how to position ourselves. But then when you look at on the domestic front, there are a lot of news triggers. There is the RBI policy coming up. The result seasons are in play. So yes, we are having a momentary reaction here. But then I think that in the next few hours, the dust should settle down because we are on the last trading day of the week. So we would not be carrying too many shots going into the next week. So now, also looking at the OI data, the around the 23,200 was the first level of supports, and 23,000 was the next level of supports based on the OI data. So those levels will be attempted to be defended, and I think that the overall other positive cue which is emerging is from the Bank Nifty. Bank Nifty has managed to hold on to the upper end, and if you put a ranking to the indices, yes, all of us know that Nifty IT has fallen way behind. So it would be Bank Nifty, Nifty, and then Nifty IT. So overall, the markets are pressured. But then what we got to see at this point in time is how are we going to handle this market situation? And this current market situation is going to be more of a trading environment. So investors will have to wait a while for this dust to settle down. Maybe closer towards the mid of the result season is where things will start becoming more clearer, and that's when we can start taking some action on the investment front. Till then, it's going to be more of a trading scenario.
Okay, okay. Raja, you did mention that the bank nifty is providing, trying to offset the losses on the overall market front. We have HDFC Bank, which came out with its Q4 business update yesterday. It has reported about, deposits have grown about 14% year on year. Gross advances have grown about 5.4% year on year. From February lows also, January lows also, the stock has, up about 10%. Where do you see the stock to go next? Today also the stock is reacting quite well.
Yeah, so the positive cues that have emerged from HDFC Bank augurs well, not only for the bank, also for the Bank Nifty. And considering the way it has been moving, I clearly envisage a nice opportunity here from an investment point of view. And every dip in this particular stock has been a buying opportunity. So the recent dips toward the region of around 1750 to 1770 was a good opportunity to re-enter for those who missed the bus. So this stock is not going to be a runaway story, but then it's going to be continuing to give a opportunity to enter at all points in time. So the overall targets which I'm envisaging in HDFC Bank over the next 6 months is around 2085 within the next 3 months.
Okay, all right. Raja, what about the Nifty Pharma Index? Because today it is seeing a bit of profit booking, but yesterday it was the top sectoral performer. Do you feel that there is more steam left given that there is tariff exemption on that front?
Yeah, definitely. Pharma is a sector where one should actually look to buy on dips. The pharma sector overall is positive, but then buying on dip would be a better opportunity here. So, if you see many of the pharma stocks that gave a nice pullback yesterday, nice rise yesterday, had drawn into a nice set of support. So, even today, when you are seeing a dip in the pharma stocks, it's giving us a buy on dip opportunity. I am positive on the pharma sector as a whole, and from the pharma space, I would look at Glenmark, Lupin, and Loris Lab as a good buy on dip opportunity.
Okay, all right. Let's take some of the viewer queries because that is trickling in. Well, the first query coming in from Naveen, he's asking the views on Power Grid. Power Grid, if you look at 1 month chart, it's quite promising, Raja. Do you believe that there is more outperformance left in the stock?
In terms of the outperformance, I would say that the stock has started a rally after the sharp descent. Now, for Power Grid to move ahead, we'll need some support. It's a organization that is driven by government initiatives, and now we need to see if there are really government initiatives going to kick in and take this rise ahead, because right now it is actually struggling. And from a higher time frame perspective, if you're looking from an investment perspective, yes, it is in a very good position right now, and it could be a good time to invest into it because with a stop loss from an investment perspective around 260, you can expect a move towards 350 within the next 6 months.
Okay, 350 for the next 6 months that we need to eye out for. Let's move on to another viewer query. That is your Mukund Yadav. He's asking the views on Parag Milk stock. Parag Milk past 1 month 21%, and recently the company has also given about like a 161 crore rupees fundraise. What do you expect the near term charts indicate, Raja?
See, when you're talking about the FMCG space is still attempting a recovery. And yes, this stock has shown some good promise here, but then it still needs to get out of the shadow. So I would say that it would be dependent on the tolerance level of the individual. So right now, the stock is showing some attempt to move ahead, and with a stop loss at 145, one can target towards 240 levels within the next 6 months.
Okay, all right. Let's take another viewer query. That is your Naveen is asking the views on Natco Pharma. Natco Pharma, how do you see on the charts? Because the last quarter performance was quite disappointing, and since then the stock has been trading in a range, Raja.
Yeah, so like I said, all pharma stocks are not on a buy on pullback story. So this
Hmm.
particular counter has been witnessing some supplies at higher levels, and since thereon the attempt to move higher has not been very significant. And even in the last few weeks, when we saw a rally emerge, this stock did not really rise up to the challenge. So considering that scenario, I would say that this is not a good stock to enter right now.
Not a good stock to enter right now. But let's move on to another viewer query. That is your Bhumika Parekh is asking the views on Garden Reach Shipbuilders and whether it is a good time to buy. Raja, the stock has run up quite a bit, 20%, more than 20% at this point of time in recent days. Where do you expect the stock to go next?
Yeah, the defense sector as a whole has been showing some bit of traction, and upward bias is definitely seen here. The likes of HAL, BEL, and GRSC is not far behind. So yes, it had pulled back based on profit booking and the market scenario into some decent sets of supports at around 1225 to 1250. So that is a good zone to buy into if it were to come there. But then the question is that whether will it come there. The overall scenario indicates that there is a steady build up at lower levels. So the minimal pullback which one should look into this stock is around 1550. So one should parcel their approach. The stock is a good buy at current levels and on dip towards 1550, and you can expect an upward targets towards 2500 within the next 6 months.
Okay, all right. Let's move on to another viewer query. Well, Satya is asking the views on Dabur for a fresh longer. How do you view the stock on the charts, Raja? Because if you look at from 1 year perspective, all the gains that Dabur had made till September to October onwards, it has all of the gains have been fizzled out.
Yeah, so the consumption story per se has not been impacting since the budget. So right now, the negative impact which we are seeing in certain stocks like Dabur will continue to persist. So HUL was also another sector that another stock that was under selling pressure. Again, it's witnessing a sell on rise here. So this particular counter is also under pressure. So now investing into it would not be a right time. In fact, if those who are holding longs should consider exit and wait for suitable opportunity into some other FMCG.
Okay, some other FMCG. Any names there you want to underline, Raja?
Yeah, I would go with the likes of Jubilant Food, and I would also go in with the Britannia because I feel that they are showing some good consolidation at lower levels post the long phase of decline. So those are the stocks which I would like to go in with.
Okay, all right. Let's move on to another viewer query. Alex is asking the view on Sona BLW for a long-term support levels. Well, the stock has been quite on the radar also, given the auto ancillary players have been slapped with about 25% tariffs, Raja, and the stock has been underperforming from a 6 months perspective. What is the support you want to underline here?
So when you take a look at this Sona BLW, the stock had its shine of glory, but then ever since October 24, the stock has been on a steady descent. Now, when you talk about support levels, the support levels are emerging closer towards the region of 375. So, at the current level, and if you take a look at the support, so it is better to exit the current position. Even from a higher time frame perspective, the stock has made a double top, and the stock is now closer towards giving a very sharp decline here. So I would not advise buying at current level. In fact, exit and look to buy at lower levels.
Okay, exit and look to buy at lower levels at this point of time. Let's move on to another viewer query. That is your Debu K is asking for the views on Crompton Greaves for an investment. Any thoughts, Raja? The stock is down 21% past 6 months.
Yeah, Crompton Greaves is definitely in a good frame of movement. And the kind of moves which we are seeing here is that every pullback has been witnessing some buying opportunity. So the last decline which has seen has definitely made a higher low, and the kind of sector which it is in, the continuous support from the government is continuously attracting some attention to the stocks which are as part of this sector. So I would say that the current setup is clearly indicating a buy opportunity here. So one should look to invest at the current levels with a stop at around 310 for an upward trajectory towards 390.
Okay, 390 upwards trajectory. Let's move on to another viewer query. Swatya is asking the views on GE Shipping and whether it is a right time and price to buy GE Shipping. From February lows, the stock has picked up pace. Raja, do you believe this is the right time to accumulate the stock?
Yeah, the stock is definitely showing good traction. It had more than it was a multi-bagger in the last 3-4 years. Now the stock has undergone some profit booking, but then the profit booking has brought the prices to a good set of supports. And the kind of movement which we are seeing in the transportation and logistics sector clearly augurs well for this particular stock. So this is a good point to buy into, and the setup is also quite encouraging. So one should look to invest into this stock.
All right, invest into this stock at this time. Let's move on to another viewer query. Alex is asking the views on Siemens, whether it is a buy now or after the demerger. What are your views? Raja? Because the NCLT has approved the demerger of its energy business.
Right. So currently, Siemens is undergoing some profit booking scenario, and when the demerger happens, that's when there will be more clarity on its entire functioning. So I would say that it's better to buy the time out and then go in for the investment, because at the current juncture it's in a no trade zone. So maybe from a trading perspective you will still be able to participate in it, but not from an investment perspective.
Okay, not from an investment perspective, but from a trading perspective. Let's move on to another viewer query that Manish is asking the views on CDSL as a stock. Any thoughts there, Raja, on CDSL?
Yeah, CDSL had its fair share of run, but after getting listed in the FNO space, the stock has definitely undergone some profit booking, and that profit booking scenario continues to persist. So, right now at this current juncture, I would like to stay away from CDSL.
Okay. Raja, shrimp stocks yesterday plummeted in the trade. Today also the stocks haven't been doing well, be the likes of Avanti Feeds or even Apex Frozen Foods. So do you see further underperformance for both of these counters?
Yeah, looking at the current market scenario and the reaction, I think that the further underperformance is expected to continue. So, it's best to avoid the stock at the moment.
All right, let's take a check at Avenue Supermarts, how the company is doing, because they did post a Q4 business update where they saw the revenue increase by 17% year on year, and the company has continued its expansion, ending Q4 quarter with about 415 stores. Raja, from February lows, the stock is up 21%. What do you expect next to happen for on Avenue Supermarts?
Yeah, the FMCG space has been showing some fair bit of traction, and right now this particular counter had given a very steady up move, and right now what you are witnessing is a profit booking scenario here. So, based on the previous instances, also, whenever a business update has come, the stock has actually witnessed profit booking. So, now you will see here that the juncture around 4,000 to 4,200 is a very tough zone for Avenue Supermart. So I would say that we should wait for a closing above this to really participate in this counter rather than jumping in right now.
Okay, let's take another look of another business update of a stock, which is your RBL Bank, because the bank's total deposits rose about 7% year on year, and the Kasha segment has also showed a healthy growth of about 4% year on year. Raja, the stock is down to about 170 levels from 200 levels. What is next? Because today also the stock is not reacting well to the Q4 business update.
RBL Bank has been a sluggish mover. So, despite news flows, the movement has been quite rigid. So, I would not look to be a investor into RBL Bank. Rather, I will look to trade it. And from a trading perspective, right now there is not much of traction visible. So, I would look to hold on, and I would like to see what really matures post all this reaction which we are having. So, as we speak, like I mentioned, Bank Nifty has been holding the fort, and Bank Nifty is the one who is taking the lead right now. And Bank Nifty is helping the market absorb this extreme volatility which we have seen since morning. And over the last 15 minutes, the dust is trying to settle down. I would not say it has settled, but then we should look to wait for the next half an hour at least since the open to see exactly what kind of action we need to take, because right now there is still a lot of uncertainty at the moment.
Okay, all right. Just one last question before we let you go, Raja. What are your top picks at this hour?
Yeah, I would like to go in with a long. I would like to go in with a long in Paytm, because I find that amongst the new age stock, this stock has been doing quite well. I would like to go it with a long at current levels with a stop at 829 for a target towards 852. And I would like to go in one from the FMCG space. I would like to go in with a buy in Indian hotels with a stop loss at around 825 for a target towards 848.
Okay, all right. With that, we have to let you go, Raja. But thank you so much for your time and answering up your queries.
Yeah, thank you.
All right. Let's take a quick check of the markets before we move on to our next guest of the show. Well, we have Sensex, which is down about 300 points. The sell-off has been extended. Nifty is also down about 140 points below that 23,150 mark. If you look at some of the sectoral losers at this point of time, all of them not doing pretty well. Be it your Nifty IT index taking it to the chin at this point of time, Nifty Auto index also on the losing end. But all right, moving on to the next guest of the show, we have Anand K. Rathi, co-founder of Mira Money, joining us. Anand, good morning. How do you view the current structure of the markets given that we have the tariffs coming out?
I mean, it's a little too early for us to actually comment on what's going to happen. But yes, we clearly know that there are a few sectors that are going to be under stress, especially the export-oriented ones like auto, gems, and jewelry. But it's too early for us to even comment on what kind of an impact we will see. It's too much of news at this point in time, too much of discussion at this point in time. People are comparing us to Vietnam. People are comparing us to, let's say, China and stuff like that. So I would rather wait and watch. Of course, it's a big news, so there'll be a lot of murmur around it. But I would rather wait and watch, see how things will pan out post April 9th, and then take a bigger call on how this will impact few sectors.
Okay. Anand, if you look at India's contribution of exports to the US to the GDP, it's just about 2%. But USA accounts for about 26% GDP of the total. So now that the recessionary concerns are back on the fore, how much of an impact do you see on India's macro picture and also on the equity markets landscape?
So clearly, if you see, that's why the market has also reacted negatively. The IT sector, right? That's one of the sectors that will get very badly affected if there is a recession probability from the US coming in. But other than that, let's say gems and jewelry, the sectors that were contributing majorly like auto sector can actually start looking a little down. And US recession is generally not good for not just for the markets, for the entire world. So we need to watch out. There are estimates saying, the GDP numbers can come down by 50 basis points, the world GDP number, I mean, or let's say 100 basis points. So this is going to be definitely negative for equity market in general across the globe. But the thing that we need to see is how much of it is already factored in, how much of it is left out to in the open, and then take a call. Of course, these are extremely volatile times, so equity in general needs a negative news to fall than positive news to grow. So any negative news coming around from US will be impacting our equity markets, at least in the short term, maybe in the next 2-3 months, especially for some more time, is what my belief is.
Okay. Anand, there are negotiation talks also going on, but how do you assess the immediate impact since the first baseline tariffs will be starting from tomorrow onwards itself?
Yeah, so I think with our team, finance ministry or external affairs ministry being there, there should be some better news is what I'm expecting. But we are too small a person to actually talk about what's going to happen. But I believe that there will be some respite in some sectors or some segments that there has been severe amount of tariff that Trump has imposed on us. This is not just for India. This is going to be for across the globe for most of the countries. I don't think India is going to go in for a retaliation mode. It is going to go in for a negotiation mode, like what we did in March, right? We actually, one of the requirements of Trump was to import more energy and import more crude oil, and that we obliged in March. We saw 67% jump in crude oil imports from US in March itself. Same happened with auto sector where we said, okay, we reduce our import duty on Teslas and Harley Davidson. So we will be doing some sort of reconciliation, some sort of negotiation before the final tariff is imposed, and that's the reason why I think he is also given time till 9th April. Immediate impact, a lot of news-driven things can go haywire, and if you see textiles went up because they are expecting more business coming in from Vietnam or Bangladesh, while pharma was stable because there's no news around pharma. So there's going to be a lot of news-driven rally. It may look a little down, but as I said in the beginning, I'm going to watch out for some more time before I take a call on, the big impact of tariff on India.
Okay. Anand, you did mention that, that textiles have been positioned well, given that the Asian counterparts were slapped with higher tariffs. But textile as an industry is already operating on very weak and slim margins. So how do you expect them to navigate this entire scenario? Because every tariff increase is going to, impact their margins by at least 10% or so. What do you suggest on that front?
Yes, absolutely. As a segment, textile is initially a low margin business. And with this tariff coming in, I think the textile companies have but no option but to pass it on to the consumer. The only difference that I'm seeing is because Bangladesh will require more price hikes than India. I think India will be will benefit in the medium term out of this the tariff imposed on many countries like Bangladesh and Vietnam. This is what we also saw when the Bangladesh war or internal conflict happened, where some part of the business did come to India. So overall, yes, low margin, but I think the customers in US will end up paying more than India's profitability getting hit because we already have very little profitability to share. So there'll be revenue growth. Profitability will remain the same. So net, it could be positive for few sectors like textiles or any sector that we will get benefit out of because of higher tariff in other countries.
Okay. Anand, but how much do you think that the markets have already priced in the tariff narrative, and how much do you think that the correction is still left on an overall market perspective?
Very difficult, but we always say that, at any given point in time when you invest in equity, 5 to 10% correction is always possible. So even today, we believe, there'll be good amount of correction if at all the news turn out to be more and more negative till April 9. But what our belief is that India will soon move away from focusing on US, but it'll soon start looking at our corporate earnings number, the GDP forecast numbers, the final GDP numbers, the GST numbers are looking good. So our focus will definitely shift away from US in the next maybe 2-3 weeks. RBI is doing its job of cutting interest rates. So next week is going to be more RBI driven, and post that it is going to be more corporate earnings driven. And if there is any semblance of corporate earnings coming back to maybe slightly better than what is expected, I think the fall at least will stop. And if there are better news on corporate earnings, I think the fall will stop and markets can actually start moving up from there. So if I'm an investor today with some amount of money, I will wait till June to really go very big on the market, but I'll keep investing at regular intervals into equity markets between now until June.
Okay. Anand, you mentioned about the interest rates cuts next week also, which is quite crucial. What is the size of a rate cut are you expecting from the RBI next week, and of course for the rest of the year too?
For the rest of the year, I'm a little bullish. I expect 75 basis points because, I was reading our agriculture minister and their report. I think at least they are pointing out that the inflation could well be under control, the food inflation especially. So if that is going to be the case, then RBI has a lot of room to cut down the interest rates by about 75 basis points this full year. But in the next, I think the next week we should see about 25 basis points cut with US yields coming down below 4%, though shortly yesterday. I think there's a lot of room for RBI to also very easily cut interest rates. So we are at a little better cushion at this point in time. So 25 basis points immediately and maybe total of 75 basis points this full year. That's what my expectation is.
Okay, Anand. Anand, you mentioned about earnings growth also for FY26. What is the growth projections that you're expecting from FY26? Because we have some inflation concerns which is emerging in US. There are recessionary fears. Do you expect to trim down from your earlier projections, or how are you anticipating?
Yeah, when you invest in equity, it's better to be a little conservative at this point in time, though there is a consensus that says that 14-15% growth is possible. I don't think 14-15% is clearly possible. Or rather, you put a number of about 12% and work out basis that. And if there's 14%, of course, it's always good news, right? So my estimate is from 14%, we may go down to about 12% or so. But at least the check we did, I think it looks achievable. The double-digit growth looks achievable at this point in time, with a lot of with an expectation of consumption coming back, with the expectation of the tax cut boosting more and more money velocity. So we believe 10-12% corporate earnings growth is possible. And if things turn out to be very good thanks to tariff, we may actually do beyond 14% as well.
Okay. Anand, what about the IT space? Given that there are inflation, recessionary concerns, and there is concern of a cut of discretionary spending also. But since we are starting off with IT earnings from in just less than 2 weeks, what are your expectations from Q4 and of course from an FY26 perspective?
So Q4, I believe, is not very bad. In fact, there is expectation that there will be some bit of a growth shown in Q4. But the next 1 year looks very bad, and market is already starting to figure that out. So it could well be a decent growth for this quarter, which is Q4, and not so great growth in the next 1 year or so. But the price is already starting to reflect poor growth for FY26. If you're a contra investor, if the price corrects another 5-10%, especially on the IT index, maybe you can actually start looking at buying IT mutual funds, maybe buying some stocks in IT, if there's a severe amount of correction that you see thanks to poor Q4 results.
Okay. Any other sectors, Anand, that you're watching out for as we begin the Q4 earnings season?
I'm pretty positive that rural economy will boost FMCG. So that is one sector that we are closely watching for. India is a consumption story. So at any given point in time that you invest, if you invest at a good price, you will see a decent returns on consumption as a theme. Of course, banking look good. In fact, I believe that people should definitely look at long-term bond fund. I mentioned this last time also. There are a lot of these long-term bond mutual funds that are available with interest rate cut expected. I think there is a good possibility that you can make about double-digit returns even in a debt mutual fund, which is something that one should explore. Of course, other than that, banking looks good. Pharma is definitely looking like it is stable, and maybe we can look at a bit of consumption as a story.
All right, consumption as a story. All right, with that we have to let you go, Anand, but thank you so much for your time and answering all the questions.
Thank you.
All right, let's take a quick check of the markets at this point of time. Well, Sensex is down about 500 points. 400 points at this point of time. Nifty is also below that 23,100 levels. So we slipped below 23,200. Then we also slipped below 23,100 levels too. If you look at some of the sectoral indices, Nifty Metal Index is the top sectoral underperformer at this point of time. 3.5% cuts coming in there. Nifty IT Index also with about 1.8% cut. Nifty Auto Index with a larger cut of about 2%. On the other hand, if you look at the Bank Nifty Index, that is reacting well given that we have the HDFC Bank's good Q4 business update trade data, and that is what is leading the markets and trying to attempt trim the losses also on that front. HDFC Bank topping the Nifty 50 charts at this point of time, 2.4% gains coming in there. If you look at some of the other gainers on the Nifty 50, that includes the likes of Tata Consumer Products with about 1.6% gains, Bharti Airtel and Bajaj Finance with about 0.5% gains coming in there too. On the other hand, if we look at the broader end of the markets, the mid-cap and small-cap indices have also slipped in the red. More than 1% cut coming in for both the indices, be it mid-cap or small-cap indices. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell, and we will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.